Japan's Tokyo Consumer Price Index CPI inflation rose 2.0% year-over-year in July, signaling that price pressures in the capital remain aligned with the Bank of Japan's BoJ inflation target. Since Tokyo's CPI is viewed as a leading indicator for nationwide inflation, the latest reading will be closely monitored for clues about the BoJ's next policy moves. 2. The rise in inflation suggests that domestic price pressures remain resilient despite global economic uncertainty. Persistent inflation strengthens the case for the Bank of Japan to continue gradually normalizing its monetary policy after years of ultra-low interest rates. This has provided support for the Japanese yen, as investors increasingly expect the BoJ to maintain a more hawkish stance. However, policymakers are also watching wage growth and consumer spending to ensure inflation is driven by sustainable domestic demand rather than temporary factors. If inflation remains stable alongside stronger wages, expectations for further policy normalization could increase. On the other hand, signs of weakening economic activity may prompt the BoJ to proceed more cautiously. For Forex traders, the key events to watch are upcoming Bank of Japan policy meetings, nationwide Japan CPI data, wage growth figures, U.S. inflation and employment reports, Federal Reserve decisions, and Treasury yield movements. These factors will determine whether the Japanese yen continues to strengthen or faces renewed pressure. Stay informed, manage your risk, and follow for more daily Forex market updates.